All right. Hey, everybody. It's Jim with the Elm Group. I'm here with Steve Rowe with CMG. And basically, he's going to talk today about kind of his background, where he works, what he does, and then we're going to talk about two products specifically that he really wins at and helps a lot of consumers with. So, Steve, who are you?
Yeah, I'm Steve Rowe with CMG Home Loans. I've been a lender in the Fargo-Moorhead area for a little over 4 years now. Before that, did digital marketing for a while and then helped people in restaurants with sales. But
Okay.
loving the lending side of things. It's great helping people get their homes and help solve financial problems.
Awesome. So, you've been a lender for 4 years, or how long have you been a lender?
This is my fourth year.
Okay. Seems like way longer.
Thanks.
Yeah. No, you are very knowledgeable and very professional. And basically, yeah, I thought you'd been in lending for way longer because you're just good to work with. So,
Thank you.
yeah.
I've
Well,
always been kind of a mechanic, so I kind of go knee deep into the rules and the niches and stuff. So try and get as much knowledge about a product as you can. That way you can find the best ways to help people out. Find that's usually the best way to kind of solve problems.
yeah. Well, tell me about CMG because I don't think a lot of people know about it, who they are, what they do, and
Sure.
kind of what the benefit is for consumers.
Sure. CMG Home Loans is one of the biggest mortgage companies in the country, actually. I am one of three people in the Fargo branch. I'm the lead over here. But we are number 2 or 3 in total loan volume and house and people served in the past couple of years. Scott's been ranked, very, very strong company. We are the largest privately owned mortgage company
Okay.
in the country, and that means we can do a couple things other people can't. We have private label products. We have different commodifications. So we have more niches and crannies that we can kind of dig into than most. And it also helps keep things a little bit sharper on the pricing side. So I know everybody's very concerned about what their monthly payment is and what the programs are. We have lots of stuff designed to help tailor that process and help make things better. One of the big ones we talk about a lot is like rate rebound. So everybody's worried about, look, if I buy today and the rates go down, am I stuck? How's that go? With rate rebound, you get free refis for up to 5 years as long as it makes sense to you. All of the fees are waived except you have to pay title work again. But you can buy now and get the awesome deal on the houses that you can, and then just we push some buttons and save you a couple $100 later when the rates go down.
Awesome. Yeah, we actually had that happen with a different lender back in 2021. We had bought, and that loan was purchased, and the lender said, "Hey, we know you're going to be shopping rates, so we're just going to drop it a whole percentage."
Yeah, there you go.
I'm like, "Yeah, absolutely, we'll do it. It's great." So it's super easy to refinance, and a lot of people are going to be looking at that. I would say in the next 18 months, more than likely.
Oh, definitely, yeah.
Yeah, definitely. So speaking of that, you said a word, commoditization. I don't think a lot of people know what that is,
Right.
and how it relates to mortgage. So how does that actually relate? What does that mean?
Yeah, that's deep nerd stuff right there. So it's all home loans, whether you get them from your online person or your local bank, they all get turned into bonds, and those bonds are what fund everybody's 401k plans, pay people's pensions. They're turned into mortgage-backed securities. So usually those go through the big investment houses. You see like PricewaterhouseCoopers, Chase, all those guys that turn things into bonds and securitized loans. We are big enough we can do it ourselves. So by cutting out one middleman, you can offer better pricing and better rates on things because someone else isn't touching it and you don't have to pay them. We use that for investment properties and second homes, where usually those rates are going to be higher than they are for somebody who's buying their own home. Our rates for those guys are equal or the same as a primary residence because we do it ourselves and cut that middleman out.
Okay. That is interesting because I was literally just having lunch with a different lender that was talking exactly about that, who basically can't do that. And so, yeah, those percentage rates were usually a point higher sometimes
Yeah.
for people. So that brought up another good point. Why would someone use a broker rather than their hometown bank?
Brokers are there's lots of different directions. Brokers, that's where I started off as a broker. Actually, it was one of the top 20 brokered lenders in North Dakota my first year. Pretty proud of that. Brokers have lots and lots of options. You don't have your own things internally, but you use other people's systems. You plug into different banks and different software options. We're a bit of a hybrid ourselves. We have 99% of our stuff is in-house. We also are just going through a list of over 500 broker affiliates. So if there's something that's very niche or we can't do internally, we're doing for one of your clients. He's buying an investment property for his daughter, and he's pulling the money out of a HELOC, and that's problematic elsewhere. So this is basically a no look. As long as the money shows up and the appraisal's there, it's good to go. So we found a place for that. He's getting an interest only HELOC on this investment property, which is very, very niche for him. So that's not something we do internally, but we were able to broker that out because we have partnerships there. Oftentimes you see with banks, they don't have that option for outside things, and they tend to be very good at three or four internal or vanilla type things. conventional loans or sometimes FHAs, or if you even go out in some small town banks, sometimes they don't do VA or FHA loans. So we have the full gambit of thousands of products and support for all those. So more options usually means better numbers for people.
Yeah, no, better numbers and better terms. Actually being able to do it.
Actually being able to close a loan. I've got 4 rescue ones where somebody thought they could pull it off and they didn't. They turned out didn't, and people are scrambling. And I've got 2 weeks to find the solve, and all those guys are going to be closing and getting their homes. But it was, it's a little bit of a fun thing. It's like, well, they said this, and it turned into this, and that's
Right.
not what you want in the biggest financial decision of your life process. That's
Right.
never fun.
Yeah. Well, I think the other big thing that you win with is speed, right?
Yeah.
So I just had a client now who was literally waiting on a local lender for 2 months. And then before they basically said they couldn't do it, and then got them with a different broker, and they had it done in less than 24 hours.
Yeah, I'm very very data and systems driven. I'm very AI forward. So we ran all of her things through. I'm very used to working with people who have a little bit of not so much that easy clock punching, some kind of different backgrounds. So ran it through our AI suite for income calculation, got it firmed up with all the appropriate things. I actually checked in with, we have an income guru guy, Chris. He's awesome. He's been doing mortgages since he was 12 by his mom's side. So ran it past Chris. He gave it the blessing, and we're good to go. Yeah, she actually cried on the phone. She was so excited, because they're having problems with the landlord and just has to get that place. But we're gonna get her a home.
Awesome. Awesome. So, I mean, specifically, we kind of wanted to talk about, the all-in-one loan as well as VA stuff. And so where do you want to start? Which one do you want to do first?
I love the all-in-one loan. It is one of the reasons I joined CMG. When I was interviewing different lending companies and different banks, I went through about 50 different ones, and this is one of the ones that really highlighted this as a unique opportunity for me.
So people that aren't familiar with it, tell me what an all-in-one loan is.
Yeah.
And kind of the better term that people hear what it is. Basically, it's a house hack or a HELOC mortgage.
It's a house hack, HELOC mortgage. I've seen it where people call it velocity lending.
Yep.
Essentially, if anybody that has a home, and I'm sure you've got a mortgage on your own, you see it where your first 5-10 years you make the payments, but that balance doesn't really drop down. You're paying. It's because the 30-year mortgage is a great program to get people into a home. That's what it's built for, to keep the payments low, to keep the down payment low, to help people who wouldn't have 20% to be able to get a home. They're great for that. If you're a little better off, if it's your next step up, if you have a little more money on hand, there are better options for you, and the all-in-one is the one that I particularly like. It pays principal first, and then you're charged interest monthly. So what that amounts to in the long term is, most people that I set up with this loan, they have the same payment they would on a traditional 30-year loan, but they're paying it off in 3 to 4 times faster. Some of them are paying it off in 3 years. Because of the way the nuance of the loan works, it really blasts them through, and it also leaves them with access to all that equity. If you were to just start writing bigger checks and pay your mortgage down to nothing, that's great. Now you have a no bill or a lower bill, but now that money's locked in your house.
Right.
You have to do another loan to pull it back out.
Right.
With the all-in-one loan, because it's all-in-one, does all the things, you always have access to that, and you can pull it back out. If you want to buy an investment property or send your kid to college, or you have a medical expense, or we've seen it where like, hey, what happens if I lose my job? I was like, yeah, well, you've built that equity up. You can borrow back from your house to make those payments for 3 months till you get back on your feet. Whereas a regular mortgage, you couldn't do that because payment is due every month. There's still payments coming out, but it pulls off of the equity versus your bank account. So it offers like a crazy amount of flexibility. It also is able to do different underwriting things, because normally when you underwrite someone, it's like, you make this much money, the house is this much, and then the rest of your world of bills, like those are the balances. Especially for someone who's like self-employed, where maybe you don't show as much on the IRS forms as you actually make. You could be a millionaire over here, but a pauper on this side. We use different calculation methods to do that, to make sure you're getting kind of the house you deserve, and your true income is shown on paper. It also has some really interesting math behind it if you don't even have a job. I did one with a bunch of retired folks where they just had a lot of Roths and IRAs and retirement funds out there. We use those things to generate income for them, and they were able to buy their house even though they don't have a job or a paycheck.
Yeah. So I think the big thing that we always hear is, I'll wait to buy until rates go down. I'll wait to buy until rates go down.
Sure.
I mean, rates were up. I think the highest I saw the last 3 years was 8 on one of our loans at the closing table. They're at about 6.5 right now, trending back up a little bit as well. What is the effective rate on something like this over
Yeah.
compared to a 30-year right now?
Yeah, it is the effective rates we're seeing on those is between the ones and threes. That's the rate you would have to get to kind of keep that payment to get it going. It is the amount of money you save on a home, and we have a simulator online. I'm happy to walk you through your scenario or anybody
Yeah.
else's scenario, but it shows you the tens, if not hundreds of thousands of dollars of money you saved. And one of the cool tools in there, it says like, okay, well, I'm done paying my mortgage after 5 years, so go me. What if I take that $1,000 a month instead? I gave it to my financial advisor guy, who's making me 8%. It shows you how much money you would have in retirement by using your money appropriately and not just paying down interest all the time. So it's really a great wealth builder tool.
Awesome. Is there additional underwriting? Let's say, hey, it's 3 years from now. We've paid off our house. We want to access that. Do we have to go back through underwriting?
No, it is your line of credit. You're good to go. The line of credit stays at the full amount for the first 10 years and then slowly trickles down to zero because it's supposed to go away eventually
Yep.
in the last 20 years. But it's a very long access to that
Okay.
equity. You can always reset it. If you're down and you're not at a balance where you have enough in there, you can always restart the loan or bring that back up, and that'd be in underwriting again.
Okay.
But no, once you have it, it's your money. You write a check.
So
You are your
it's
own
a
bank.
10-year window compared to a 5-year at a lot of other places.
It's a 30-year window, but 10 at all of it, and then it just trickles down from your 20
Got
to your 10 to your 30.
Got it. Okay.
But yeah, you just write checks. If you want to buy a car or you want to put it all in black, that's your business.
Okay. So let's talk nuts and bolts as far as how that actually works for people. So let's just assume simple math. Someone's making say 60,000 a year, 5,000 a month. How does that work? So what would the payment be? Let's say I'm just going to use simple math again.
Oh,
200,000. Your payment should probably be about $1,200 to $1,500, maybe closer to 2,000. Let's say.
That's one of the interesting things, and that's one of the harder concepts to kind of get through on it.
Yeah.
Because it re-amortizes, that means the math is recalculated every month. The payment changes every month.
Yeah.
Usually for the better. We have a tracker on the simulator where it shows you what your 30-year mortgage payment would be, and almost always it plummets right below that line pretty quickly. So it does start off in the ballpark of right where your 30-year mortgage would be. It's very, very similar, if not a little higher or low. But the way it works is all your money goes into you start up a separate bank account, a CMG bank account, as well as the mortgage. There's two different things happening there. All of your pay and your income goes into here, which sweeps over and reduces your mortgage balance.
Yep.
So your mortgage balance shrinks astronomically quickly, and then we only calculate the interest we charge you based on what's left. So that gets added on once a month. But you don't want to put all your money in mortgage. You want to eat and drive your car and do things. So now you also have that whole gap of a line of credit. So you spend from the line of credit as much as you want, and that ceiling doesn't change, but the floor does as you pay it down. So your spending is borrowed from there, and your income goes towards bringing that down. It's a very complicated way to talk about that, but it effectively crushes that mortgage down to nothing extra fast and leaves you with the line of credit available for your spending and your purchases and your investments.
Got it. Yeah, and I know a lot of people that have run that manually that are doing that. Like when you hear that term sweeping, if you literally just go out on TikTok and look at HELOCs and sweeping and house hacks, gosh, I can't remember his first name. I think it's Martin. Talks a lot about it for his clients. And basically, it's a way to pay off your mortgage incredibly fast.
Yeah. But it's all a manual process. And there's 5 or 6 other companies that have something similar out there, but none of them have kind of mastered the sweep function that automates that and then simplifies it, as well as the web page and the app are pretty cool because they help gamify. So like, hey, what if I bought a car? What if I put $500 more? What if my Christmas bonus went here versus here? And it shows you your debt-free windows and how much that makes you in your long-term retirement goals. If you are focused on where I want to retire early, I want to retire well, I want to have more for my family, I want to stop paying bills, it's an amazing option for you.
So you and I have talked about this from an investor type standpoint of, using it to be able to get your next investment and using that for your down payments and things like that. Talk about that a little bit and how fast you can gamify it that way.
Oh gosh, yeah.
I've paid off $100,000 on my primary residence. I want to go buy an investment property. Tell me some stories on that. People that have been doing that.
Yeah, there's lots of different ways to do that, and most of it kind of comes down to having access to cash. Because there's different ways that we evaluate investment properties versus same way as a regular loan, where it's like you make this much money, the house costs this much money. Can you float that bill? or we do special investor ones where we don't really care what you make, but it is based on will that property cash flow? Will the rent beat what the payment is? And as long as that works, it's a much simpler process with much streamlined in underwriting. We don't even care what your job is. We don't check any of those kind of things. So having access to that ready funds lets you move quickly on those things where you probably couldn't buy them otherwise, or your income couldn't really cover it. But that's how most people kind of get up from that 1 to 2 doors to 20 doors quickly by daisy chaining those houses and doing the Burr method, where you buy, renovate, rehab, and pull the money back out and then buy the next one. So that's kind of how that goes, and you can get pretty quickly into doors.
Yeah.
We also have, but usually in that scenario with DSCRs, you're looking at about a 20 to 25% down payment. That's great, and that's pretty typical. On the private label we talked about, the self-commoditized, we can even do that at just 15% down.
Yeah.
Whereas now you can probably buy 5 places versus 4. So if you have 5 doors versus 4, your income potential jumps up significantly, and that really helps get you there quicker.
And then all of that income comes into the CMG account.
Yep.
And then sweeps out. And so you're doing this not only on your primary residence, you're doing it potentially on a lake home, potentially on a bunch of investments.
Yep.
And how many properties can you actually have in this? I forget.
Currently, each one has to have its own separate loan. You get about 10 of those, 10 CMG loans, not CMG ones, 10 all-in-one loans, or 10 conventional loans. You can have as many as you want investor loans on the side.
Okay.
So they're all kind of branched differently. What we see a lot is where people will buy an investment property, and then the security deposit and the rent will all go into that CMG account, and that helps bring that down. And the tenants are paying your mortgage down for you.
Yep. So everything's coming in, it's sweeping off.
Yep.
Things like that. Okay.
Yeah. Extra fast, extra efficient.
Okay. So if someone wants to talk to you about that, what do they do?
Reach out to me on my website, steverowmortgage.com. You can also call me at 701-205-1422. Happy to talk, either in the office or coffee or a pint, and we'll figure stuff out.
Awesome. Well, that sounds good. Well, let's talk now about VA stuff.
Yeah.
So we obviously got the base up in Grand Forks. Got a lot of vets down here in Fargo as well. Talk to me about how you're able to beat other veteran lenders and what you're bringing to the table there.
Yeah, we're number 2 in the country as far as like vets served over last year, so we're very proud of that stance. We're very proud of our VA loans. We do it internally, which was not going out to somewhere else doing, which is nice. We have more control over it. I've actually got one guy with just not the best credit history. He's on the right path, but he had some oopsies in the past. So we're doing what's called a VA manual underwrite, where instead of using the automatic systems, we pull out the paper and pencil and check off the list. Like, okay, yes, your credit score that says you can't pull this off, but we see your track record. You've explained what happened there. You can get this house. And we just got the green lights on him, and he's closing next month. Nice. Otherwise, for general VAs loans, it goes back to being the mechanic, knowing where the nuances is. We had one person who it was, if you're a vet, you kind of know this dual entitlement. Husband and wife were both buying the house. We found a way to kind of combine those entitlements to get them where they're going, but they really wanted this $800,000 house that was absolutely gorgeous, and they had a great deal on it, but they just couldn't swing it as they were. One of the cool things about VA loans is you can use some of the seller's money to pay off some of your own debts. So we bumped the price up. We got the seller credits really very high, and we paid off their car loan and paid off a credit card. So it brought their usable income way up, and they were able to afford the home. Walked them through that. They were turned down by 5 banks before they found me, and we got them that house. But like, amazing people, they make the money. They're just a little bit more complicated and need a little more nuance.
So that brings up a really good point on overlays. What's an overlay?
Sure. So all the basic loan types, conventional VA, all those ones are created by Fannie and Freddie, by the Veterans Association, by HUD, and they have their rule book. What banks very often do is they put their own set of rules on top of that. So the VA says you can do this, but we really want you to have a credit score of here versus here. I have one of those going on right now. Well, we're a overlay free lender. We have no overlays on our things, and the ones we do, there's a couple here and there, and we usually can fight and get right past them. I was like, no, we're not doing that, so we're going. So that makes it a little more acceptable. One of the people I talked to last week, they went to the local bank. They said, "Oh, sorry, you have a 650 credit score. That's not usable for us." Well, the VA is fine with that as long as the lights turn green, as long as the system works. You can go significantly lower than that. So talk to me. I had them up and running in, I want to say it was about an hour. And they were out shopping for their house, and they're working on getting there.
I think that brings up a good point. Is I feel like, and maybe you've seen this, but I feel like a lot of traditional lenders right now, requirements are going up, and people are being much more conservative on the lending side than we've seen.
I can't speak for anyone else. You know
Yeah.
more than me. We are doing quite a bit to pull those back.
Yeah.
We just because one of the things that all the agencies, the people who make the main loans, the Fannies, the Freddies, the VAs, they're trying to make things saner. They know people don't really work in the factory. They don't
Yep.
work in their cubicles 9 to 5.
Yep.
So people have much more interesting income streams than they used to. So they're doing a lot of things to clean those up, make it a little more sane how the calculations go. It's about knowing what the updates are because those change daily and weekly and monthly.
Yep.
We just changed, well, not we, they just changed how they underwrite self-employment income.
Yep.
So someone who was waiting for that second year of employment because they were held back to a lower amount,
Right.
as of last week, they can buy probably twice as much house. We already have one example, a guy he worked for an oil company. He was working the derricks and building those things up. He started his own company a year or so ago. He's filed taxes. He was making 60, now he makes 120. With the old rules last week, he could only be underwritten to $60,000 of income.
Right.
With the new rules, 120.
Yep.
It's a lot more house.
Right.
That's the house he wants.
Yep.
So by knowing when those things change and knowing when they're going to change, we can kind of keep an eye on things and like, oh, Susan, we talked last week. We talked 6 months ago, and like you weren't quite there, but now this thing came across. I think it fits you.
Yeah. Yeah. Literally, I had that conversation after having a conversation with you last week.
Yeah.
Went back to a client who, same thing, moved here from a different area, self-employed, nothing else changed, making more money, but they couldn't get lending. And now we're up and running and looking at that. So I think that's a good point. Speaking of, how does this latest housing bill help consumers?
That one I'm not too deep on. A lot of this stuff
Okay.
is still out
It
there.
was all theoretical until it was signed, and now it's kind of
just
got signed by rules.
Yeah,
Yeah.
a lot of those rules tend to be like as the committee will figure out. So there's
Yep.
a lot of things out there. I know some of the bigger talking points were larger corporations can only own so many properties. There was a big fear that BlackRock and those guys are sweeping up all the affordable housing and making them rental, which was definitely hurting first-time home buyers, people with the middle or lower incomes. That was a big win there. I know that their focus, from what I've seen from the bill, is very much on the builder side and the zoning side. We spoke to Fargo and West Fargo mayors and stuff back when I was on different committees, and that's one of the things they want to focus on too. They want to do more infill. They want smaller lots, more dense housing, because it's easier to support from a city side. Less taxes because you need less fire departments, less police departments, less sewer lines. So a lot of it was very focused on the kind of housing that's available. I'm not fully read up on that one, but that was my understanding. It was mostly like, okay, how can we make these houses more affordable? How can we take down this dilapidated $100,000 old house, put up 2 or 3 townhomes, make them affordable people, and help them get in there. So we should see a lot of things on the builder side soon.
Okay, makes sense. Well, what else would you say people need to know about you or CMG?
I'm one of the top 10% lenders in North Dakota. Won a couple awards for that. I love helping folks out. I love finding different solutions for them. And I take sort of an education first approach. I've several of the loans I'm closing this month came to me because from people who were approved elsewhere, but they didn't know what was happening.
Yeah.
No one explained to me what this was or this was, and all of a sudden things started breaking. It was like they didn't tell me why.
Yeah.
So I very much like to talk to you on the front end and be like, okay, this is how this works. Here's some options for you. This is some paths I see. Which one do you want to work with?
Yep.
I want this to be kind of a collaboration, not a here's your number, yes or no. And by doing that, I help empower you guys and help people feel like they're back in the shoes. This is the biggest investment of your life. This is, apart from who you marry, this is one of the biggest decisions you'll make. It needs to be comfortable. It needs to be understood. And especially if it's your first time, especially if it's your second time, it's so important to know the nuances of where all these numbers are coming from and where some of them maybe may go up or some will go down, or what you could do to impact those numbers and specifically do it. Just kind of working through those with different software and different presentations to kind of simplify and educate. I think that really helps people feel much more comfortable when they're out there shopping.
Yeah.
The last thing I want is someone standing in the driveway of a home that they love and they're not sure if they can buy it.
Yep.
I told them maybe, but not quite, or they think it'll pull it off. But I want them to know when they're standing there with their kids, they can get that house. And if I tell them they're going to close, they can close.
Yep.
I have never not closed on a loan that I've promised someone they can get a house on.
Yeah.
And I'm very proud of that.
Yeah. And I think on the agent side, on the back end side, one thing you're really good at is telling us on the front end, like, hey, they can have this house, but here's how much we need on seller close,
Yeah.
on seller credits, or here's how much they need to pay down, things like that. And
Oh,
so it just
sure.
makes our job a lot easier too. Of like, okay, here's how we have to structure the offer in order to win, but here's how we have to structure the offer in order to make sure that they're comfortable.
And that's the hard part. You got to, like, how do we make the best option for the buyer? How do we get the offer so that you can actually get the house? 'Cause that's the
Yep.
first thing. If you can't
Yep.
get the house, doesn't matter what the
Yep.
payment would have been. So working together with that, I've many times I've called the buying agent and be like, hey, we're asking for this way because not because they need this or they can't pull it off on their own, but because this makes it a lot more attractive to them.
Right.
One of the things we're doing quite a bit of lately is dual approvals,
Yep.
where these guys are perfectly fine for a conventional purchase.
Mm-hmm.
And sellers agents love that. They like conventional purchases. It's a little easier to work with, especially in those lower dollar houses. But it'll save them $1,000 a month or $100 a month if we go FHA. Can we try it this direction?
Right.
They're good to go, but can you play ball with us? It'll save them money. It's better for them overall. And we talked through that with the seller, both agents and all the buyers, and they get it. And that's helped us win some deals, that reassuring the confidence, like, because it will close. That's what they care about. They're selling their house because they want the money. They're moving on to their next one or whatever their program is. So being able to reassure them and not ever not having closed really helps that.
Right. Awesome. Well, hey, I'm Jim Renfro with the Elm Group. I'm Steve Rowe, CMG.
Thank you very
Appreciate you guys tuning in and listening, and yeah, thanks for sitting with us.
Appreciate it, Jim.